We'll continue with types of business organizations, right? So go to private sector organizations. Right, please read for me.
All profit-making businesses that are not run or operated by the government are private sector organizations. Sole traders and partnerships are small businesses that are part of the private sector. Companies in the private sector that want to expand can go through the process of
Incorporation.
incorporation. This allows the business organization to create its own legal identity. In the UK, a company must be registered with the Register of Companies and comply with the Companies Act 2006 to have separate the legal status. This means by law that the owners of the business and the company are now separate.
Thank you. So when we talk about a private sector business, it's a business that is run without government presence. That means it's a business that basically think about making profit. And it's a business that has a separate legal entity from the owner. That means it's a kind of business that whatever happens to it does not simply affect the owner of the business. Do you understand? So, but before we go into what a private limited company will be, a sole trader is also a private business. A partnership is also a private business because these businesses are run with the aim of making profit. So, but what separates them, what makes them differ in terms of their legal status is that if you want to expand as a partnership or you want to expand as a sole trader, you need to be incorporated. And incorporation means a legal identity that allows a business to be separated from the owner. Do you understand? Because both partnerships and sole trader are businesses that their owners are attached to the business. That means they have unlimited liability. So if you are thinking about having a separate legal identity from your business, it means you have to be incorporated. Then you have to register through the registrar of companies. So that would allow the registrar to make you become a corporation. Do you understand? So a business that is incorporated becomes what? A corporation. So being a corporation means that you are either a private limited company or a public limited company. Do you get the point here? So a sole trader, you have to note, a sole trader or a partnership are both private company or private organization or private sector organization. But when you talk about another kind of private sector organization, we have to talk about a private limited company or a public limited company. So a sole trader could become a private limited company. A sole trader could become a public limited company. It depends on the kind of legal status it's trying to adopt. Do you get it? Do you get it, please? Yeah. Okay, so you know what incorporation means already. It means a business is having its own legal identity. So the owner of the business has an identity. The business has its own identity. Is it clear, please?
Yes.
All right. So let me quickly conclude that side here. So here I wrote, private sector, these are businesses that are not run or operated by the government. Businesses that want to expand, like the sole trader or partnership, create their own legal identity, can do that through incorporation. And what is incorporation? This separate legal status allows a business to have limited liability. So when a business is incorporated, it means the business is having what? A separate legal identity from the business. Then go to limited liability. What is limited liability? I wrote, this implies that the owner of the business are not liable for the company's debts and can only lose the capital equity that they have invested in the business. So we call it a limited liability company because whatever debts the business is owing, it does not affect the personal wealth of the owners. So it is now limited. So the only thing the owner of the business could lose, it's the investment or the capital or equity that the owners of the business have put into the business. Aside that, they lose nothing from their wealth, their private personal wealth. They're not going to lose anything. Is it clear? So that is limited liability. Then a private limited liability company, I said it already, it's a business, is a company that is private and that has a legal identity from its owners. Then we go to public sector organizations. So for public sector organization, we're talking about government parastatals. We're talking about government businesses. So here I wrote, these are businesses that are operated by the government. They provide services. They provide services rather than aiming to make profit. So we call them public sector organizations because their own aims and objectives, it's not profit maximization. They want to ensure that society becomes a better place. They want to give services to the society. That is their aim. It's not profit. They could make profit, but the aim is to ensure that the society becomes a better place to live. That is what a public sector organization is. Example of a public sector organization is the government hospital, the government school, the General Electrical Company of Libya, that provides electricity. So these are public corporations or public sector organizations. Is it clear?
Yes.
Okay. So now we go, I've explained all that. Now we go to, I explained public sector already. Now, they said name 3 public sector organizations in your country. We said that already, right? So we go to the connections between stakeholders and a business. So here I wrote, a stakeholder is any person of business who is affected by the actions of that business. So we call them stakeholders because they have interest in the business. So whatever actions the business takes, directly or indirectly, it affects their own way. So that's why we call them what? Stakeholders. So they have interest in the business activity of an organization. So who are examples of stakeholders? We have here they wrote owners, managers, employees, the government, provider of external finance, competitors, suppliers, and customers. So we take each one at a time. The owners. Why are the owners considered as stakeholders? They are the owners of the business. They put capital into the business, yes or no?
Yes.
They put equity into the business. They've invested into the business. So they should have interest in the business. So what is their interest? Their interest is they want to check the financial statement of the business. They want to compare the last year, the previous year, with the present year. They want to see that the business is growing. They want to see that, oh, the profit the business is making is worth it. This is why they have interest that's why they have interest in the business activity. They want to be sure that their capital is safe. They want to be sure that they can have returns on their investments. That is their interest, the owners. Is it clear? Then we go to the managers. Who are the managers? They are the ones that take day in, day out decisions about the business. So what is their interest? They want to measure the performance of the business because they are the one representing the business, the owners of the business. So if the business is doing poorly, then they will be accountable for it. So when we talk about managers, we're talking about those that have interest in the performance of the business. Is it clear? So for managers, like I said earlier, managers, they are in charge of decision-making, of daily decision-making of the organization. So what is their interest in the business? Their interest is to see the business performing well. Because if the business is not doing well, they will be accountable for that. Is managers clear for managers? Then the third one, we're talking about the stakeholders, right? So the third one, employees, are you there? For the employees, so who are the employees? We're talking about the workers. Why do they have interest in the business activity? They want to see the financial statement of the business. They want to see how profitable the business is so that they can make a case for themselves for a pay rise. You know, if you are working in an organization and the organization is making so much profit, the profit the organization is making is based on your efforts too.
Yes.
It's a collective effort. So you could tell the organization or the management that, oh, for the last 2-3 years, the company is making so much profit. And for the last 2-3 years, my salary has not been increased. I need a pay rise. So an employee would monitor the financial statement of the business to make a case for himself or herself about a pay rise. Do you understand, employees? Okay. The fourth one, customers. When you talk about customers, why do they have interest? Why do they have interest in the business? The customers have interest in the business activity because they want a product that is of quality and at affordable price. So they want to be sure that the business is getting its supplies from the right source. They want to be sure that whatever they are buying from that business is of quality. Do you understand? So this is why they have interest in the business. They want to be sure that the business will be able to provide them with all the products going forward. Not like when we come today, we're not going to get it. It'll come back next year. No. They want a business that is consistent to get their supplies from or their products from. Do you understand customers now? Then we go to suppliers. Who are the suppliers? These are the people that supplies the business. Those are the people the business buys from. Do you get it? So why do they have interest in your business? They are your suppliers. Why do they have interest in your business? They have interest in your business because they want to be sure that whenever they give you goods, you can pay back as at due, as at when due. And they want to be sure that you don't have so much creditors. Like, oh, you are owing business A, you are owing business B, you are owing business C, and you want to still take from business D. They wouldn't want to sell to you. So that's why they have interest in your business activity. They want to be sure that you don't have so much creditors.
Yeah.
Is it clear? The sixth one, providers of external finance. When you talk about finance, finance is the disbursement of cash or fund from a surplus unit to a deficit unit. You're talking about getting money, borrowing money from maybe any financial institution because you need it to sort your business or your project. That is what finance is. So when we talk about external finance, it means that you are sourcing for finance outside of the business. So if you are sourcing for finance outside of the business, why do those that provide you with external finance have interest in your business? They want to be sure that you are credit worthy. They want to be sure that when they give you loans, you can pay back.
Yes.
Do you understand? They want to be sure that, oh, if they're giving business A the loan, business A will be able to pay back because business A has always paying back loans. They want to check through your records, how often you pay back, how reliable you are in terms of paying back your borrowings. That's for the providers of external finance. Is it clear?
Yes.
Okay. So for the competitors, it's not written here, but let me just explain what competitors. For competitors, what do they need your business activity for? They want to compare with their own business too. They want to measure. They want to measure how successful they are. And the only way they could measure how successful they are is to measure through other businesses that they do the same thing with. You want to know how good you are, you have to see your mates to compare, not you knowing yourself that, oh, I'm good now. You have to compare with others that are in the same category with you. So these are why competitors, they want to be sure, they want to know how fair you are, what your position is in the market. Maybe you are doing better than them or they are doing better than you. And that's the same way you are going to check your competitors too. Is it clear? So that's for competitors. And that's all about that. So go down. There's a case study here. Let's just go to the example. Okay, it said, this limited was founded in 19. Please read it for me.
What?
The case study.
Dyson Ltd. Limited.
Yeah.
Dyson Limited was founded in 1991 by Sir James Dyson.
So that means Dyson Limited, not Dyson anymore. Dyson Limited, right? We call it Dyson because it said Sir James Dyson. So let's say it's Dyson. Okay. Okay. His most
famous invention is the dual
cyclone vacuum
cleaner, also known as the bagless vacuum cleaner. Dyson Limited also manufactures the bladeless
fan. Yeah.
What's the bladeless?
Blade. You know blades that can cut you.
Yeah.
Now they are saying a bladeless. That means a fan without blade. Okay.
Hand dryers and hair dryers. It employs more than 9,000 people and sells products in more than 65 countries.
Okay.
What are the advantages for the Dyson Limited of being a private sector
organization? So one of the advantages of Dyson Limited to be a private sector organization is that, one, it will be able to maximize profit. It can expand to as much as it wants to, right? It could sell whatever product it wants to sell, in as much as it's making profit for it. These are the advantages. You get it? It could expand to whatever extent it wants to expand. Is it clear? Then why do you think Dyson Limited is not a public sector organization? Why? Why do you think it's not a public sector organization?
Because I don't know.
It's because it's not run by government.
Yeah, he's the one who.
Yeah, because it's its own business.
Mm.
It's not run by government, so it's not a public sector. Do you understand?
He's a sole trader.
No, it has a private limited company. That's LTD. That's a private limited company, not a sole trader.
He's the only one who.
Yeah, you would have shareholders, maybe friends and family.
But only his name is.
Yeah, it could be ABC. It's not ABC Stores. It's ABC Limited. Example, ABC Limited. So it is not. That makes limited. The word LTD makes it to be a limited liability company. If it was just ABC Stores, it's a sole trader. ABC and Co. That's partnership. Did you get it? If it is ABC Stores,
What?
just making an example like Dyson Stores,
Mm.
Dyson Company, that is a store. That's a sole trader. But you said Dyson Limited. So LTD is a private limited company. Then we have PLC, which is a public limited company. So it's not a sole trader. Is it clear now?
Mm.
So they say, which is the most important stakeholder in a company like Dyson Limited? Which is the most important stakeholder in a company like Dyson Limited? Which of the stakeholders do you think it's more important for Dyson Limited?
Manager.
Manager. Why the manager? The most important?
Because he
Dyson Limited was founded in this year. Dyson Limited also manufactures bladed fans and it employs more than 9,000 people and sells products for more than 65 countries. So, who is the most important stakeholder for Dyson Limited?
Customers.
Customers. Customers.
And the manager.
All are important. All the stakeholders are important. But for me, the most important are the customers. Yeah. Well, what about the employees? Because the employees have to really work hard to be able to, supply all the 65 countries. So let's say the employees. Do you get it? The employees are the key to the organization. Do you get the point here? Because if the employees are not working well, it might be difficult for Dyson to be able to, supply the 65 countries. So all the stakeholders are important.
But anyway, if it wasn't managed well, it won't be.
Also, the manager is so important.
Yeah, but who is the most important?
The most important for me, I still see the employees. I'm seeing it on the basis of the employees. Everyone will have its own opinion, though. With an opinion, it's an open-ended question, so it depends on your opinion. Do you understand? You come up with your opinion, then you back it up with your own points. Get it? So we go to the third one. It said, which is the most important? Okay, that's the last one then. So we go to the example. Okay, let's just go to the exam practice question. Okay, are you there? Scroll down, please.
Yeah.
Are you there? Yeah, it said here. Answer all questions in this section. Which of the following is not a stakeholder for a business? A doctor, a competitor, supplier, government. Which one is not a stakeholder?
Government.
A stakeholder. Which one is not a stakeholder? I explained.
Doctor.
Doctor, yeah, doctor. Question 2. Which of the following is a disadvantage
Of becoming
a sole trader? Yeah.
Disadvantage.
Yeah, that's the problem.
B.
You have unlimited liability. It means that whatever happens to the business, it could be part of your own problems too. So the third one.
Which of these is most likely to be
a public sector organization?
Biscuit factory.
Yeah.
A place, a restaurant. Police.
The police, yeah, the police is run by the government. Okay. Then the fourth one. A limited company must have which of the following? A limited
What?
company. A limited
What
company.
does,
A limited, like Dyson. A limited company like
no,
Dyson.
you didn't say four. The fourth
Really?
one, you didn't.
Sorry, I skipped. What? No,
Yeah.
we did. What does oh, thank you. What does the word limited after a business name indicate?
What does that mean?
They said the word limited, LTD,
Mm.
after a business name. What does it indicate? What does it mean?
C.
No, the owner's liability for the debt of the business is limited. Yeah, thank you. That's it. The owner's liability for the debt of the business is limited. So that means whatever happens to the business, the only thing the owner of the business is going to lose its
Yeah.
investment. All right, so go to the next one. A limited company must have which of the following? A limited company must have which of the following? Unlimited liability, the ability to sell shares to friends and family, the auditor check on its financial statement, a government-run business. A limited company.
Limited company.
Yeah.
It's like your own. It's not for the government.
Not a private sector. I just talked about Dyson. When I was talking about Dyson, I said something about Dyson.
What?
Just try to think about it. I said something that is just here right away.
B.
B, yeah, the ability to sell shares to friends and family. I told you, Dyson is limited. That means it can sell its shares to the friends and yeah. So go to question 6. Which of the following is the best definition of a stakeholder? So which of the following is the best definition of a stakeholder?
B.
No. Someone who has control over a business. A stakeholder, like we said, stakeholders are those that have an interest in the business activity. So which of these is the best definition for the stakeholder?
What I don't see.
Stakeholders are those people
Yeah.
that have interest in the business activity. So
D.
no.
The sponsor.
No. It is A. Someone who is affected by a business. I told you that stakeholders are those that the actions of the business, the actions of the business could affect them. Like customers, the action of the business will affect them. Yes or no? Yes. Yeah. Question 7. Why should a sole trader record all the financial information about her business? Why do you think a sole trader should record all the financial information about her business?
B.
No. He said so that she knows how much to pay her suppliers. Okay, what about if she knows she needs to know how much she pays her supplier? Definitely she would want to know how much her suppliers or our customers are owing her to. Yes or no?
No.
You said because she's required to do so by law. No. For stakeholder or for sole trader and partnership, they are not required by law to provide financial statements. They are not required.
No,
B,
I didn't say.
I know, I'm telling you why it is not A.
Okay.
For B, he says so that she knows how much to pay her suppliers. No, it's not because of that. Because if you are thinking about her suppliers, she also has customers. She also has customers that would have bought on credit from her. Yes or no? So if B is right, then D should be right also. So the answer is C, to prepare financial statements. So you need to keep your financial information to prepare what? Your financial statement. We said accounting is what? The act of keeping records of your financial information to make it a financial statement. So every business, irrespective of you wanting to show the government or not, you need to have a record so that you can prepare your financial statement. Then you'll be able to know what your profit is, what your assets is, what your assets are, what your liabilities are. These are the reasons why you have financial information. Not because you want to. Part of the financial statement will contain your suppliers, will contain your customers. Because in your financial statement, you have your statement of financial position, where you talk about your creditors, which are the suppliers. Where you have to talk about your debtors, which are your customers. So which one takes all? The financial statement. Is it clear? Is it clear, please?
Yes.
Question 8. Which best describes the term
Limited
liability? So which one is stating limited liability?
B.
No.
D.
It's okay. You don't get it. It said the
Limited.
term limited liability. We're just talking with
They're not able to take all
no
decisions.
It's C. Limited liability.
The
term limited liability. I told you limited liability means that whatever the business is owing, whatever debts that the business is owing, it will not affect the owners of the business. That is limited liability.
They have limited decisions, I thought.
No, what is limited decisions? They are owners of the business. They take decisions. Who will take decision if not them? Who will take the decision? They are the owners of the business. Who's going to take decision on their behalf? No one. So they don't have limited decision. They have unlimited decision. But the owner is only liable for the money they invested. I told you that the owners of the business would not lose personal wealth. Rather, they're going to lose their investment, their equity, their capital. That is that's the money they put into the business. That's the only thing they're going to lose. So the answer is what?
C.
Yeah. Question 9. Read for me, please.
Which of the following is a disadvantage of a partnership? Increased capital or equity, increased workload, increased knowledge, increased argument. D.
D, great. Increased argument. That's conflicts. And the last one is number 10.
Why might a government department be interested in the financial statement of a company?
So why would government have interest in the financial statement of your business? Why?
To check that the company is paying the correct amount of tax. Decide whether to invest in the company. Ensure that the company continues to receive supply. D.
D? To see that if the company is no. It's A. Government department. Why would they have financial statement? Why do they have interest in your financial statement? To be sure that your company is paying. I told you about government. Why do government have interest in what we do? They want to be sure that we are paying the right amount of tax. That was the last thing we talked about.
Even if you want to repay a loan.
Loan. Government. Do government give loans?
Yes.
Government do not give loans. They give grants. The government help. They give grants, not loans. They give grants.
Banks give loans.
Banks give loans.
Yes.
Is it clear?
Yes.
Okay. So now go back to. Okay, let's see.